Welcome to our podcast, July 14th, Friday, 2023. How you doing today?
Doing great. By you?
Pretty good. Off to a good start today. But checking in on the market, I was going to do a little screen share here so we could kind of chat about what's going on and get into just kind of a little weekly recap. I was doing those news videos, and I think it might be more consistent if I do them on a weekly basis rather than a daily basis. But that's kind of my vibe, was to talk about daily news versus trying to get like way too detailed. Daily news snippets kind of seem to be digestible. So let me share my screen and let's see. Actually, let's share my tab. Okay. So now I'm sharing this dashboard. Can you see?
Yeah.
Okay, so let's just kind of go through this. I'm going to read the news as I would, and maybe you can kind of advise me on what's your take on it. You have triple the experience that I have, but I still have over a decade myself. So I actually I saw this video that inspired me. So I'm going to read the market here a little bit, and you tell me what you think, and I'll be kind of a training opportunity, coaching opportunity for me.
Sounds good.
So I'll always just run to this little summary here, and I'll see if I can pull anything out of it. So bonds are arguably settling back into a previous range after a brief panicked foray up and over 4%. Okay, so I do watch the 10-year Treasury, and right, it's 3.816. And when it went over 4%, it was kind of like, hey, what's that going to do to the markets? That was cause for concern. But beyond that, I feel like it gets a little technical for my taste. So I just watch for the 10-year to see if it's going to give me a vibe on what interest rates might be doing. And sometimes it tracks and sometimes it doesn't.
I think most of the time it does. I think the key thing is, a simple breakdown this week is the bonds came back down. I think they were 376 yesterday, and it's the best we've seen in a week for quite some time. It took our pricing way back. We saw a lot of improvement this week, which is great because we haven't been able to say that in some time. So rates improved this week, which is great to see because that keeps that market moving and gets people back out there that were on the edge, so to speak, and gives them a little more energy to go forward. That's for sure.
Okay, let's keep cruising down here. So lock and float index. So we kind of talk about this a little bit, that interest rates fluctuate every day, but you just basically get to, you lock in at a point in time, whatever the market's doing, that's what you get. We used to have strategy around timing that, but now it's kind of like, hey, if you have a deal, get your rate locked and move forward. There's just more of a process than a strategy at that point. Until you get into refinance territory, then it's strategy central. But this website has a lock and float index. Right now, it seems like it's right in the middle. So I don't know. What do you think about that lock versus float outlook or bias? Would you have a bias on any given day, or you would just lock if you have a deal, right?
Well, this year, Jeff, I think the biggest thing for me is when you get something, look at the market and you can see what's trending that day. And if it's after we saw 4 days of improvement this week, I would have locked absolutely yesterday, even today, just because we're in such a better position than we were last week. And you never know, as I say, don't look a gift horse in the mouth. You never know how long these things are going to hang around. And it could rally back, but it's so volatile. You just don't know. So I always protect the client, which, ask them first what they prefer. And I don't think anybody's really gone wrong locking in during the window. Because it only takes, 3 weeks, 4 weeks to close a transaction. And the markets don't seem to be that crazy in that period of time.
So yeah, let me move my charts out to 1 month. We were on 5-day charts, and I don't really like how they do these candlesticks. Maybe I think to have to go to 3 months is a little easier to read maybe. So it's more, it's kind of, you can see the trend lines here moving a lot less than the up and down of the rest of the candlesticks. These candlesticks are all over the place, and your trend line is kind of gradual.
Well, it shows you on a daily basis. That's what your candlestick is, how much the market moves in a day. And those green ones are the good days. And the thing on these charts is the higher you are on the chart, the lower the interest rate. So you can see how our rates have just improved here recently. And so it's, those are, that's
So
the
it's
good
kind
news.
of interesting here. You look at 10-year Treasury and 30-year, what is this, universal mortgage-backed security, or what's the U stand for?
Universal.
So these are like inverse of each other, pretty much.
Yeah, because as
So
you,
mortgage-backed securities have, I remember this from economics class, what it's like an inverse relationship to the U.S. Treasury bond.
because typically the typical match there is the lower the treasury bond is, the higher the mortgage-backed security is, which means the lower the interest rate. So I always look at the chart on the bottom and follow that because that's really the number we get to contend with. So you see the last 4 days, today's kind of a red day, but see look at the improvement that moved in the last 4 days. All those green, the 3 days before today, it's kind of incredible. And so that's the good stuff. That's why we see a rally. And what's surprising is because the government's not doing anything, like they were back in 20 and 21. So this is all based on current just market activity. What's going on? It's pushing things. What's the belief in inflation and the how that matches up? If it's kind of stabilizing, feel more confident about it than they have been. Excuse me, the first half of this year. So there's belief that they believe there's a little bit of stability going on out there, that maybe the Fed won't be as anxious to push rates up beyond this, which affects our mortgage rates as well. So that's all good news, and we got to partake in that this week. So if you did have a transaction, I would believe most people would have locked because they're shopping last week. Our rates improved significantly. That people go, wow, let's just take advantage of that and don't gamble. Don't take hey, I think it's going to drop further. Then boom, like you're seeing today, a little bit of response where it's not as strong as it was yesterday.
Yeah, I think I used to be real excited about, oh, the market moves. That means you have to time it just right. And now I'm more about just follow the process. Once you have your deal, lock it in. And then on the refinance side of things, you really try to just be aware. And that's why you do want to know about like what news reports are coming out. You can see this chart has this thing here, economic calendar. And it shows things that may be interesting. So this kind of helps me because I don't necessarily know what moves markets, but I know, hey, I can watch these reports. Here's what's forecast. Here's what was previous, and here's the actual. And these things just kind of help if you watch it enough and read it enough. It's almost like one of those things you start to understand it eventually, and you can
Well,
just kind of use it to just. It's like a temperature check, in the morning, and it's not necessarily going to be hold true, but at least it gives you the outlook for the day.
yeah, no, they're great gauges. Like when the consumer price index comes out, all those things, consumer sentiment, all those indexes come out and report. You have a gauge on if it's a minor thing or a major thing and the impact it can have on the market. And you can't rely on those things 100% because all the things you want to hear could come out and the market could do the opposite. So you just kind of got to pay attention because this market is just looking and grasping to find direction and to find some kind of, stability. And so when we see these improvements, that's when I think you really want to take advantage of them because it's too hard to. You say you want to get the best rate. Well, it's like catching knives. You know, you might grab a handle on one, but the rest of them you're going to get cut. So it's like it's hard, and you just want to go with the indexes that help you make that decision and the trends that are going on.
Also think that's why you want to develop a relationship with your mortgage advisor so that, I mean, hopefully you can develop a level of trust and you know that this person's saying, hey, here's a rate and fee. I'm looking out for you in the market and I'm offering you the best rate. And there's just no question for whether that person has got your best interest. And you can feel good about going through that, whatever the rates may be. I always feel a little weird when you give somebody a quote and then they call you a couple of days later and you're like, oh, actually, rates are higher now. And that's where, you got to, and I like doing videos like this so we can explain there's market movement. These are real things. And we're not just willy nilly out there, but that's the importance of staying in touch with each other as well.
Oh, that's key because the market, like you said, moves throughout the day. Typically, you'll know what's going on by early afternoon because the market closes. And but still, rates can move around, but people need to make decisions. And a lot of times, some lenders have cutoffs at 5 o'clock, and some you can lock through the evening. And so you got to check the lender to know what those parameters are, so you don't miss out and be available. I mean, communication is everything today, just like it always has been. But technology is great because you can relay this information very quickly, and because it does move quickly, and you can miss it. You see a trend in 15 minutes, that rates move. So,
Well, and
yeah,
something else that's interesting. I mean, most people, you can lock your interest rate Monday morning if you get your offer accepted over the weekend. Say you're buying a house, you want to lock in, but not. Sometimes it's nice to just lock it on the weekend if you can. Not every place has that ability. So, in our world, what's that called? Overnight and weekend protection. I don't know if we have. Some lenders could lock your loan at midnight. Some lenders have to lock it before 5 p.m. Some lenders, no weekend locks. Some lenders lock whenever you want. Brokers are probably more flexible than banks. And then independent mortgage companies like us are probably somewhere in the middle.
yeah, it's nice to have that flexibility. That the key thing is every lender is cut off at 5 o'clock for jumbos. That's the big thing. But as far as conforming products and governments and those kinds of things, we have that ability to have those protections, which is really helpful if you're talking to somebody on a Friday night and they make a decision or your offer is accepted, that kind of thing. I think the one thing that's really important, all gets back to previous podcasts, is get pre-approved, get in the system, because the minute you're in the system, then we can lock you. So the market turns like that, you're ready to go. If you're thinking about it and you're not in there and this is, I want to lock, you got to get that stuff loaded. By the time you get loaded in the system, you may miss that window. So,
well, and how does that feel for you as the professional or the service provider when you're trying to do the best for your customer? You want to lock them in, the market's moving, you're trying to get it all done. And even for us, if it's not done up front and we're ready to go, then it's like we're trying to scramble to get it there for you. So, even for the peace of mind of us to have a good day, we want to get it in there so that we're ready to do our job for you, for the customer, right? So that we're not, hey, get your application loaded in 10 minutes. I got to lock your loan right now. It's like, hey, let's get everything step by step. And then when it's time to lock, we can get in there, boom, and do it as soon as we need to.
Yeah, no, it's key because you want to get off on the right foot, and it's so. I've seen it happen too many times. The market moves that quickly, and so it's nice to have the ability. It doesn't take much to get the data in there. To have the ability to lock a loan. That's doesn't take much at all, but it doesn't really take much to do a loan app these days. But
well, I have a customer that just applied and they did full application. They ended up not quite wanting to make an offer on the house, but they can. And right now, this kind of was the takeaway: is like, oh, we can do this offer if we want to, right? I don't think we do, but we can do it. I'm like, well, yeah, you're approved. Everything looks good. We've checked it out, so you're good to go. And it's just that's a whole different mindset versus the previous weekend. They didn't know if they can do it. That impacts whether or not whether you can do something or not, and knowing it impacts how you're going to think about that and have the family conversations and all those things. So now they have another piece of information in their tool belt to think about this and say, hey, do we want to spend the cash to close and do this? Do we want to hang tight? What's really important to us right now that we have that extra piece of information? So I think that's really helpful. And that's where it feels good to be a consultant and say, hey, here's the information. What do you guys want to do with it? And are you seeing anything that I need to look at additionally to go from here? Is there anything missing? So,
yeah, no, I agree. I can tell you, I can't tell you how many times I've talked to people just in conversation about rates, and then they get all excited, and then they want to make lock their loan, and they haven't even made a loan application yet. There's nothing you do, and it changes, and then you're sitting there thinking, like we have power to stop that. Speaking about that, there's a product out there that's become popular in this market called Lock and List, which is great for agents listing a property for a lot of sellers in the market, which is because of what the market's done this year, is you can lock a property for sale. So anybody comes to buy that through a certain window of time, that interest rate is locked in. So if the market's moving up, that seller can sell that property at that rate, that we've locked in. And it also has a float down provision. So if the market does make an improvement, you would also gain with that as it happens too. So that's a great tool that was underutilized the first half of this year, which I still question because we all felt these rates were moving up. That would have created more deals for get homes sold quicker, or a reason somebody might have liked this property over that property because you save 0.25% in your interest rate. Huh, that's huge.
It is funny because you see all the doomsday outlook for the headlines, but then the mortgage strategies are all so optimistic. Like, oh no, rates are going to drop. They're definitely going to drop. So let's just get in there, and then we'll wait for the refinance. But rate drop maybe further out. Who knows what's going to happen in the future? So I think being able to lock and list, so the seller participates in that and says, hey, this property has an interest rate attached to it. If you qualify and meet all the other buckets, you can grab this interest rate that I already secured for you, which that's amazing. So that's something to probably dive into in full detail on another podcast. But like we were saying, keep referring to our previous podcast, but as far as why work for Evergreen Home Loans, innovative tools is pretty interesting. And it seems to be really helpful for us in our experience here so far.
It certainly made a difference. And I think that's the key. I mean, it's one, working with a local lender is huge. They're transparent. They're trying to help us get every deal on the books we can. And that is not the norm with every lender. And so it's a great environment, great place to be. And we certainly enjoy the people we're working with. That's fantastic.
So I have to ask you about that bear on your wall. That's a great photo. And I can't tell if that bear is just relaxed and hanging out in the afternoon, or if he's looks maybe a little thoughtful. What's your take on the bear, and why do you have a photo of a bear on your wall?
Basically a caricature of how I feel today. No, your mom and I were walking through a store and just saw him, and she picked him out. I just loved him, and he's just relaxing is what he's doing. And you just love to catch an animal that's just having a day. And in my opinion, that's what he's doing. So yeah, I love that photo.
Cool. Well, hopefully we can get off to a good day, and we read the market and watch these things, but we also try to have a good laid back attitude about it, and we'll present whatever information we can to be helpful, and do our best with whatever we can to help. So that was probably a bit of a redundant sentence, but.
Yeah, no, I think, in general for today, it's been such a great movement on rates this week. If you're out shopping, look seriously, and you also look at taking advantage of locking in at this point, because I think it's a good time to what we've recovered from this past week. That'd be my advice for the weekend.
Great. Well, my advice would be to relax and have a day, and then go from there. But yeah, I would agree with you. Get all ready to go for whatever you're doing, and my favorite thing now is just being prepared for whatever it is. So.
Yep. Well, I agree too. Have a great day. And the Mariners are back in action tonight, so check them out and get back in the swing of things.
Cool. All right. Well, thanks for chatting with me today, and I will see you on the podcast in a week, and I'm sure I'll see you before then in person.
Okay. Have a great day.
See ya.
Bye.